Good morning. With it being December, everyone's always thinking about what are some last minute moves you can make to save money on your taxes. Well, today I've got some valuable insights that can help you maximize your savings before the year comes to an end. If you've got kids under 18 and you're navigating world taxes, this one's for you. So let's dive in. So, number one on our list, put your children on your payroll. I recommend this a lot to parents who are entrepreneurs and they've got kids who are actually able to do some work. Did they lend a hand in your business this year? Well, it's time to recognize their hard work and save big on taxes. Pay them for their efforts and put on W-2. Well, so why would you do that? It's not just about fairness. It's about maximizing savings. W-2 wages paid to your under 18-year-old child are deductible for you. And here's the best part. They're exempt from federal payroll taxes for both you and your child. That means more money in your pocket and no tax headaches. And with the recent tax changes, your child can use these standard deduction to eliminate income taxes on a portion of their wages. Now there's a win-win. Now, here's an interesting point. Get divorced after December 31st. If you're thinking about changes in your marital status, timing matters. Being on December 31st means you're considered married for the entire year. So run the numbers carefully. Getting divorced after December 31st might save you more in taxes. Just keep an eye on alimony, as recent tax changes have introduced some new rules on that. Now, here's a surprising one. Stay single to increase mortgage deductions. Did you know that two single people can deduct more mortgage interest than a married couple? If you co-own a home with someone other than your spouse and you bought it before December 15, 2017, you can individually deduct mortgage interest up to $1 million of qualifying mortgage. But if you tie the knot, that limit drops to $750,000. Crunch those numbers before exchanging vows, but also take a look at other factors to determine whether or not staying single makes sense for the rest of this month. Now, along those lines, if you're thinking about tying the knot, think about this. Getting married before December 31st. Doing so might bring big tax changes for the year. Being married on that date means you're considered married for the whole year. I know it sounds strange, but if you're married on 11/59, December 31st, you're married for the entire year. So run those numbers to see if saying I do a little sooner could save you some serious cash. Now, let's talk about the 0% tax bracket. If you're helping out your parents or loved ones some extra cash, consider this. If they're in a 0% capital gains tax rate, consider giving appreciated stock instead of cash can be a win-win. They get the full value without paying capital gains, and you get the extra bang for your giving buck. Now, whether you're managing a business, going through life changes, or simply giving a helping hand, these tax strategies can make a significant impact on your bottom line. Before the year wraps up, take a look and evaluate whether these opportunities and see which ones might rev up your savings. After all, who would want a little extra cash in their pocket? Now, remember, these strategies are general tips and might not fit everyone's situation. Always consult with a tax professional to get advice tailored to your specific circumstances. So here's to smart savings and a financially brighter future.